Hey, this is CatsMeow492, and this is my weekly SPY technical analysis for the week of April 6, 2020. So, as always with my analysis, we're going to start with the news. We're on Yahoo Finance right now. I've browsed over most of the news. I don't see anything particularly new other than the OPEC meetings to discuss ending the oil war between Russia and Saudi Arabia fell through for some reason or another. It's basically a he said, she said kind of thing right now. The details of it are kind of meaningless. For everyone who's in the Discord chat, none of this was a particularly big surprise to me. I think this oil war is going to continue for a while longer, and I wouldn't trade based on it. If you actually go and you look through the order flow during this whole oil war crisis, there was actually a net outflow. So while people were buying calls and long positions, the outflow of large orders was actually toward puts and shorts. So it almost looks like a situation in which there was some market manipulation involved. So on my advice, I'd honestly just stay away from this one. If you want to do some leaps on USO, that makes a little bit of sense. Eventually the oil war is going to end. But I really wouldn't get your hopes up on any single one of these meetings. Anyone Trump, Putin, or the Saudis promise are going to happen, or when they promise they're going to try to resolve this oil war, I seriously doubt it's coming. So there's nothing particularly new other than that. I expect this to fall through for a while. None of that's a surprise to me. I might actually pick up a leap when oil ETFs crash on Monday, which I'm sure they will on this news when everybody realizes this war isn't going to end anytime soon. So you might be able to pick up cheap leaps. I would wait till the price settles a little bit so you can at least, if you're going for options, you can at least buy something long term when the implied volatility is a little bit lower. You kind of shoot yourself in the foot when you end up buying right after a massive rally or a drop because implied volatility rises. So then not only is your position fighting long term, it's also fighting implied volatility too. If it rises in the direction you want, but it rises too slowly, you're going to lose some value from the implied volatility. So there is a position there. I'd wait. I think there's going to be good entry soon, but be patient with that one. The oil war is going to go on for a while. There will be plenty of opportunities to get in on that one. As far as additional news, I don't see anything particularly interesting. Coronavirus is obviously still on the rise. Interestingly enough, though, it does seem like Italy has kind of reached its apex, and new coronavirus cases it's not declining. The total coronavirus cases aren't declining, but the rate of increase is declining. So Italy is probably going to level off on coronavirus cases fairly soon. It'll be interesting to see what happens with the market then. I think that's when we're going to start seeing some significant upward movement. It's still a little while off because the United States isn't anywhere near its apex yet. The last time I did a technical analysis, I think cases were around 150,000 last week, and now it's up to 333. So it's doubling. The number of cases of coronavirus in the U.S. are doubling about every week. 9,528 deaths, 17,000 recovered. So it used to be there was one death for every 2 recovered. It looks like that's even dropping in the U.S. So more people are dying. And I would expect that because as the healthcare system gets overwhelmed, they are not able to provide the same quality of treatment to patients. So you would expect more people to die as more and more people get coronavirus, which is unfortunate, but we are just analyzing the market and trying to figure out what to do with our money. So that's about it for the news. Nothing too significant other than the oil deal fell through, and I would expect them to continue falling through. All right, so let's get into the meat and bones technical analysis here. As always, we're going to start off on the weekly, work our way down, try to identify the macro trend, and then decide good entries and take profits on the micro. Looking at the weekly chart, we can see that the downward momentum is kind of tapering off a little bit. I would expect downward movement for longer, obviously, as long as coronavirus cases are increasing. There's significant catalyst for economic decline there. But we can see that on the KDJ, we have been oversold. We can see from the J line here that the rate of change for how oversold it is actually decreasing. So it's getting less and less oversold by the day. Now this can sometimes be an indication of a potential reversal coming. I wouldn't say we're anywhere near happening with that, but there could be like a minor reprieve, like an uptrend. I plotted this last week. This is kind of like the 10-year trend line for SPY, and I think last week I posted that I would expect the market to get up or around that line somewhere, and it eventually did. We've had a red week last week, but it was kind of a weak red week, so I am expecting us, at least in the short term, to kind of trend around this line a little bit, which is what's going to end up happening with the KDJ. Is it's going to go up a little bit as it holds around here. As it stays around there, it will trend more and more into the overbought territory, which is essentially like the market priming for another drop, is kind of my expectation at this point. And when we look at the daily, this kind of confirms this general belief. The KDJ right now is super overbought. The MACD is bullish, but also converging. So it looks like we're kind of going to get a minor downward movement and then probably some sideways movement. I'm not expecting, maybe at the end of the week it's possible, but I'm not expecting any gigantic moves this week, which kind of makes it hard for swing traders, especially with implied volatility so high right now. When we look on the 1 hour, the 1 hour looks kind of indecisive right now. As I look at it, the KDJ is oversold, I would say, and J line is converging into the K and D lines, indicating that there's a potential reversal coming soon. But when you look at the last few hours of the market on the MACD, there was little to nothing happening. It just kind of leveled off and trended sideways. So there is a lot of potential for the short term, maybe early Monday to open green. I'm not looking at futures now. You always have to look at futures before the market opens, although be careful with futures lately. There's something I'm going to go over in a minute. I think this market is fertile ground for fund manipulation right now, and that's a lot of what's been going on with these kind of micro trends, these end of day spikes and these sudden uptrends on days where we should be down. I think we're in a low volume price level right now, which makes it very easy for funds to kind of play the market, get people excited about the short-term momentum in the market, thinking there's going to be a reversal, and maybe it'll go up for 5 hours and then just bomb the end of day. Or maybe the reverse happens where it's selling off all day and then all of a sudden there's like a 1.5% increase at the end of the day. In periods with particularly low volume, like where we're at right now, there aren't a lot of people buying or selling. So what they'll do is they'll feed in consistent buy orders over a couple hours, and this gets traders and algorithms excited. So then they buy in and rise the price even more. And I'll link, Kramer talked about this, I think in like the early 90s sometime. It's a pretty good video. I'm not sure he even knew it was being recorded, but I hadn't seen it till I saw it trending on Reddit. But this is something all experienced traders know is going on at low volume price levels. It's just so easy for them to do. And the best thing to do is not to fight against them. When the market's trending up and it's irrational, and it shouldn't be, that's when you should look for put entries, because I'm sure that's what they're doing now. The best thing to do is just try and get ahead of whatever idea you think. If you were a fund manager, what would you be doing right now? What is your play in this low value market? Just get out in front of it and try to play it like they do. Don't try to play against them. The market can stay irrational far longer than you can play solvent or stay solvent. So right now, if you're a scalper And a day trader like me, the play is to really just get out in front of what the funds might be doing and ride the waves they're creating. When you play markets like this, you have to be extremely disciplined about your stop losses and take profits, because since the funds have such power to manipulate these low volume markets, the market can take an unexpected swing on you anytime. And if you're not disciplined about your stop losses, you can watch a position that's maybe 25, 50% up immediately turn around and be 80% down just because you didn't have a stop loss. And that's the nature of the game right now. So going over to TradingView, it kind of confirms what I was saying, that we're in an area that isn't particularly high volume, very ripe for fund manipulation. On the short term, I am expecting a very, very small rally. Just the 1 hour looks like it's ready for maybe a rally on Monday. It's hard to tell till futures and just the whole news cycle comes out before Monday. But the 1 hour looks ready for it. The 1 day and 1 week still look bearish, but not particularly bearish. I am expecting at some point for us to retest supports between 236 and 240. I think there will be a next leg down on this downtrend, but this week's more going to be about finding good entries, in my opinion, than it is actually watching positions mature, long-term positions anyway. And if you're day trading, it's going to be about being ahead of what the big guys are doing and trying to take advantage, surf the waves that they create. Right now, I think we're right on top of a pretty major resistance or support here. It honestly depends on how Monday opens. Previous supports become future resistance, and previous resistance becomes future supports. So this is significant. The market's been kind of riding it for the last couple days, trying to decide whether or not it wants to go above or below. If it does get below this 248, 80, 249 level, it's probably going to sink down and retest resistances around, or supports around 240 and 236. If it stays above, I don't expect it to get far above 256 at any point. There really just is not enough momentum and volume in the market right now to trend significantly in either direction, unless it's purely funds working the market. So when you see trends, trend upward, that seems like it's going up $10, it's been steady all day, just be careful. And the same thing for down. The big signal here about a macro trend kind of influencing the market and not just some micro trend fund manipulation is going to be sustained volume. When you see sustained volume for 5 hours, then there's some kind of market catalyst here. If it's going down, people are actually getting scared and letting go of positions. If it's going up, then people are actually buying in, and we're genuinely going to see a settle in a new price level. When it's these low volume movements, it's almost for sure just some big fund taking advantage of volatility and trying to hedge a position and move the market around it so they can collect on both sides. So as far as long-term positions go, I'm probably going to look for small put or credit spread, call credit spread positions if the market makes it around 256. If it drops significantly enough, the 249 level, and I'd say 247.75 would be about the level I would expect before I say this is the new channel. It's going to be between 236 and 249, and it's probably going to retest supports at 240 first. So yeah, if it gets below 247.75, then I'm probably going to be looking in to put or call credit spread positions and take profits around 239, 240. If it gets above that, then I'm probably going to do the opposite, although I never recommend trading against the macro. I rarely do it unless I'm scalping or day trading. So as a long-term position, I would not recommend a call here at all. Although, like I said, the uptrend is not part of the macro. That's likely fund manipulation. So that would just be me riding the waves created by the funds. I don't recommend it if you don't have day trades. If you are just looking for a long-term, weekly position, and we get above 251, just look for a put or a call credit spread open probably around 256, maybe 253 if you wanted to make sure you got an entry, and then just make sure to put a stop on it because the market can go wild with this low volume. You never know what's going to happen. So once again, to summarize, don't get too excited about jumping into USO. There might be some leaps there, but look for a good entry. I think there will be better entries, and I don't think this oil war is going to be over for a while. I'm not sure what the time frame is on that, but if you want to do a leap, just find a good entry. Wait for a day when the price is generally low and IV is generally low. There hasn't been too much market movement, so you can get the best leap price possible. Also, be careful this week. The low volume price area we are in is just fertile grounds for funds to manipulate the market. So when you see the market going up very suddenly, very quickly, if you don't have day trades, don't get excited. Don't think it's a recovery. Look for a put entry, and look for the put entry around the resistances and use a stop loss so you can get the fuck out. These fun pumps and dumps can last a lot longer than you think is possible to. So that's why it is important to be very disciplined about your stop loss and try to find the most optimal entries possible. It's a lot easier to just take a 5% loss right away and then find a good entry where when the market reverses, you can potentially make like 80 to 100% instead of just getting a bad entry and just watching that loss mount into 50% loss, 75% loss, and then maybe the market swings your way and you take profit way too early because you're just so excited to get out with any profit at all. The most significant resistance for this week, we're starting off right on a resistance or a support, and it really hasn't been defined what it is. It's right around 249. It's been a very high volume area in the past, and there's no way to know whether or not that's going to play as a resistance or support till we see what happens open Monday. If we open Monday and we see a lot of red and the price gets below, I'd say 247.75, I think it's what I said in the video, then I'm going to start looking for puts and then look for places to take profit around 239, 240. Maybe if the market's not going as fast as I want, I'll take profit even higher around like 242. If the market gets above 249, and I'll be convinced it's going to stay above 249 probably when it gets around to 251, then I'll probably be looking for short-term calls, but I don't recommend that at all if you don't have day trades. If you don't have day trades, just look for put entry positions. And the ideal entry, once it gets below or above 251, is probably going to be around 255, 256. So thanks for watching. If you like any of the charts I use Webull and TradingView. There is a referral link down below for Webull. It's a really great platform. I've loved it so far. I've never experienced any downtime, so if you're using Robinhood or Questrade, just get off of that. It's a disaster. I don't care what you use. You don't have to use my referral link. My recommended brokers that I've never heard of anyone having a problem with are Thinkorswim through TD Ameritrade. They have a really great platform. I think in the years and years and years TD has been around, I've only heard of them ever having like a 15-minute outage one day, which is nowhere near as bad as the 18-hour freaking outages, sometimes multi-day outages people experience on Robinhood and Questrade. If you're still using those platforms and you lose money at this point, I don't even feel bad for you. It's just a disaster waiting to happen. You're just waiting to watch positions blow up. For a while, I liked Robinhood's app and I used them on my phone. And then after the almost 2-day outage, I just couldn't do it anymore. Even though I only had a couple $1,000s riding on a position, the fact that I couldn't exit and I just had to watch myself lose money and I couldn't even put in a stop loss, it's just, I don't know how you could be serious enough about this to watch this video and still use Robinhood or Questrade. Highly recommend Thinkorswim or Webull. I love Webull. If you want to use Webull, you can use all the same charts I do, all the same analysis, plot that supports the same way I do. And then if you use the referral link down below, we both get a free stock, which is a cool bonus for making these videos. Thanks for watching. I will probably have indicator spotlight on KDJ up this week. I'm also going to be working on my risk to reward video and position management, which if there is one video you ever watch, it'll probably be that. You cannot be a successful trader without understanding risk to reward and position management. It doesn't matter if you win 98% of your trades. If you're trading 1%, think about this. If you're trading 100% of your portfolio balance and you win 98% of your trades, it only takes one losing trade to have zero money. That 2% is going to hit sometime or another. You may have $1 billion by the time it hits, but as soon as you hit that 2% chance, your entire account balance is going to be wiped out. That is just one example of why you'll probably need to watch this video and why position management and risk to reward is so important. It might be the only important. So thanks for watching. Hopefully I'll have those videos up soon.